Well, we were talking about inventories earlier, and Akiko, for our chart of the day this morning, we want to talk about parent company of TJ Maxx and Marshalls, which reported this morning better than expected earnings, but inventories were up for the company. Again, same story across a lot of other companies that have reported because it shows low demand and a need to discount, but $7 billion, that's up 37% year over year. But, for TJX, we've seen the stock jump a lot. I don't know if we have the quote right now, but lastly, when I was looking, it was in the green. If you're a discount retailer, high inventory might not be the worst thing, which explains why it's up 7%, because you're a discount retailer. You have more options. People can kind of sift through and have some.
Well, I'd be curious to see how much of that in terms of their sales starts to pick up, because to your point, discount retailer, and obviously it's not just apparel. They've got home goods. They've got other, brands there that certainly, even in good times.
Well, so what's interesting about this whole story about inventories, which we were talking about at the top of the show, is that this is bad for most retailers because, again, you're just stuck holding the bag on all this stuff that you can't sell. And especially if you have to start discounting it, that makes your margins worse. But if you're a discount retailer, your margins are already lower. In fact, higher volume is what helps you. And it's actually this weird situation where TJ Maxx might be benefiting from the more empowered consumer. You have a lot more product coming through, which means there's higher, because look, you will spend 30, 45 minutes in a TJ Maxx looking for something nice. And if you have more options available to you, then there's a higher probability you're going to walk out with something, especially even in this environment where you might be willing to pay another $2 or $3 for a t-shirt because of some of the leftover stimulus money. So that's why I want to emphasize that the better statistic maybe to look at is the adjusted pre-tax margin, which was 9.4% for the quarter for TJ Maxx. It was 7.2% the same time last year. So even though that chart that we showed you, there were lower inventories at the same time last year, it's actually coincided with higher margins for this company as well, which I think is a reason why they're one of the only winners on the street today.
Well, and you'd also think with, department stores, if we're talking about sort of higher end, that trickles down, right? If they have additional inventory, that comes through to TJ Maxx. That's why you go to discount retailers. Mm-hmm. So they might have more inventory, but steeper discounts, which would bring more people into the store.
Yeah, and the call happening right now, management saying that they're comfortable with the inventory levels, even though it's up 40% year over year. But of course, I don't know how much of this applies to the food. Who are the people that buy food at Marshalls and TJ Maxx? Like that when you check out, you have to walk through.
I always find myself looking.
Oh, you're that person?
But I don't buy. I don't know, chocolates, is there an expiration date?
There's not, but
they wouldn't be selling it if it wasn't good.
That stuff has been sitting there since the W. Bush administration. I'm I don't really know.
I always find myself going for kitchen stuff.
You're a snacker, though. She's a snacker. She's a snacker.
I'm not snacking at TJ Maxx, though, or their stores. But I don't know, maybe there's more inventory.
While you're sifting through the stuff, you can eat some of those expired chocolates. That's the strategy.
Yeah, we can have a stash here at Yahoo Finance.